And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Welcome to the Limiter Podcast. I'm Dan Hodgman, as always, sitting down with Jack Peltzer. Jack, how are you doing over there?
I am doing great, Dan, because as we said right before this, I am $5 richer. As in the last second of the game, don't tell me when I'm down. ES hit 4,000. Looks like it might even close there. I just want to thank everybody who stuck with me the whole way. I just want to, thank my family, everyone who trusted me. I'd like to thank, Apple. I'd like to thank Tesla for their earnings. All good stuff. So, Dan, I'm feeling good. How about yourself?
Well, I'm really not feeling good about things. I wish inflation had more of an effect here. But you know what? We'll give you credit where credit is due. We hit 4,000 before we hit 3,500, just barely. We just barely missed that 3,500. But you know what? At the end of the day, I think we're all winners. If you have any sort of retirement account invested with the S&P in one way, shape, or form. So I'll take that. I'll take that as a victory for myself.
Yeah. And before we get to the daily rundown for today, I just want to say I'm still not sleeping super pretty on it. I'm not saying this is the end of it. This could be a bear market rally, a little squeeze out here, because usually if you look at past, almost all the time when we have one of these market crashes, it doesn't turn around until we have a blow off top on the VIX. Go and lay a historic VIX chart over a historic chart of you name your index, the S&P or the NQ. Usually there's a huge spike. And by that, I mean above 40, 50, 60, got above 80 in the case of COVID. And then that's when you make the low, when it's essentially flushed out all the weak hands. We do not have that yet. We've just had kind of elevated volatility for a long time now. So I'll be very interested to see where it goes from here. But how was today?
Well, today a little different. You got crude oil taking a break last night in the overnight session. But really, since we opened up, it's been a sideways market. That market kind of floated from 96 to 97.5. So pretty much a quiet day in the crude oil post last night's move. Obviously, equities, that's what Jack's just talking about here. S&P finally broke above 4,000 for the first time in quite some time. Both those markets made really nice moves after the opening break. They opened up right around settlement price, both S&P and the NASDAQ. NASDAQ just a little bit above. They broke down a little bit to the swing lows that we saw yesterday during regular trading hours. Same market state. That market was trending higher throughout the day yesterday. We saw them break. That was where the both markets bounced here today and continued in that upwards direction. Is that the sign that these things are going to take off? I think Jack's probably right. There may be more coming down the road. You have the European Central Bank with the first rate hike in over 10 years, I think it was, Jack, correct?
I didn't look at the news today, but I will take your word for it.
Yeah, so the European Central Bank had their first rate hike, and I believe it was 10 years was the number that they were saying. And you got the Fed continuing that conversation of increased rates there. Next, let's talk about the euro. Prime example, European Bank raising their rates.
Sure.
You had a really volatile morning this morning for the euro. Rallies all the way up to a weekly high, breaks down to a weekly low, and ends the day actually relatively unchanged post that number. And then the 10-year note, I forgot to touch on gold, but 10-year note and gold, identical chart patterns here. With these rate hikes from the European Central Bank, you see both of those making huge upward directional moves. So good opportunity in some of these markets. I will say I'm relieved to see oil breaking. I did do really lucky. I mentioned it on Coach's Playbook earlier this week, but I made a drive out to North Carolina from Wisconsin, a solid 850 miles or something like that. And my average price per gallon, I'm not going to tell everyone how much money I spent in gas because, well, my car's still not very good at it.
You drive like a Mad Max car or something like that.
A big old pickup truck that does not do well on gas mileage, but I averaged $3.97 a gallon.
That's a good one there. Cheapest gas I've ever seen was in Kokomo, Indiana. I guess they have some sort of pipe complex there, but just a little something if you're ever driving through Kokomo, Indiana.
Well, how about that?
Where we did have a little bit of, we were talking about like the blow off, and you talk about 350 gas reminds me of the recent high in June of the 10-year was around 350 basis points, that is. And I was just looking at that chart right now, and that almost looks more like the VIX explosion you would see. And we've been saying with all the CPI stuff, the inflation is to keep an eye on those yields. They're off quite a bit. We're down around 2.9 from that high of 3.5 in the 10-year. So obviously they're not pricing in inflation for the long term. Now, I made a mistake when last we recorded this podcast. I think I said something along the lines of that I could not imagine the next CPI, which was the previous, I said a few days before the previous CPI being lower. I made a cardinal sin of economics there. It wasn't the prediction. I forgot what a lagging indicator it was. So when we had that July CPI number, that's the June number. And obviously things were very high. So I want to correct myself and say this, and I will eat all the S in the world if that's not the case. The next one to come out in August for the July will definitely be lower than that 9.1%. I'll say it. And
Jack,
what am I going to do? I got to figure out something.
$5.
Do.
Let's put the $5 back on it. You won $5 today. Let's put $5 back on it.
You know what? We'll calculate with 9% for inflation. We'll do $5.45.
All right.
There we go. Sound
Perfect.
good? Cool.
That sounds, it's funny you mentioned that. When I saw CPI's number last week, I really wanted to call you and send you a message. You'd be like, so Jack, I explicitly remember you saying it's going to be lower next month, and it wasn't. I got a kick out of it, but I'm glad you brought it up because I was going to bring it up at some point today.
We were talking about how, the oil was 30% off the high, and I wasn't thinking about it being the month before. So there it is. I'll take my lumps on that one. But speaking of those, I think we got a fun topic today, a few things we could talk about. We want to talk about the biggest myths about trading that we have encountered. And I think that there could be a few fun ones here. We could start with like the obvious one, which is, I think there's a lot of people out there that think that, for instance, trading is not that it's not difficult, but especially that it's like one of the easiest ways to make a bunch of money. So Dan, I'll let you start on that one.
Jack, I'll tell you, it's an interesting one because people do bring this up, and you'll see it next week in next week's Coach's Playbook. We actually had a pre-record this week, and it's something I do talk about. Hollywood has glamorized this idea of what a trader is, and you make it look very easy. It is not an easy thing to do, but yes, it's an easy place to make a quick buck, but it's even easier to lose that money. So really, to be a good trader, it all comes down to, how do I manage my risk? How do I kind of pull it back in a little bit? It's not about making the quick buck. Those come over time, but that's definitely not about making the quick buck.
The distribution of outcomes, right? If you're talking about like making a career and not a hobby out of something like this, think of the distribution of incomes for, say, every doctor or every mechanic in the United States, or every let's say even if you're driving Uber or something like that. They start at zero and then have some middle, and everyone's kind of in between, right? If you look at trading, the bottom isn't zero. It's a whole lot lower than that. There's not a lot of careers that you can embark upon where you actually lose money. It's like trading and the restaurant business are the two ones that come to mind there. You got to be kind of nuts. Have you been watching The Bear at all, by the way?
No, I have seen this. It's a Hulu, if I'm not mistaken, right?
Yeah, it's on Hulu. It's awesome. It's a Chicago show, but it's about the same sort of problems involved in like owning a restaurant. It's great. But I think there's this misconception where far too many people, they go into trading thinking they're going to make a bunch of money, takes a ton of work. And then you hit on what I was going to say, my second myth, which is that trading is glamorous. Maybe in a few cases. But I mean, as you know, out there, if you've been doing it for a while, a lot of it is just sitting around in front of screens doing nothing. In fact, that's the right thing to do, is to be doing nothing. So I don't think you should go into it sort of prepared. I used to, call it sort of the sparkler bottle traders. Like, they're kind of like the first group we talked about, the people who are kind of like, I'm going to become a trader they have it on those damn e-commercial, what was the company called? E-Trade commercials now, where it's like show someone with like a boat or something. It's like, don't get mad, get even. It's like, not many people are buying boats or flexing bottles from, trading on eBay, not eBay, E-Trade. I suppose
it's
eBay
so
too.
true, because you think about it, like you turn on TV, and let's be realistic, in any trading places, probably one of the most famous movies that has to do with futures trading, right? You look at, how the lifestyles that they're living, and they've got butlers and maids and cooks for them, and they're, living these lavish lifestyles. Now, don't get me wrong, there are traders out there, no doubt about it, but that is not the common trader, the common man or woman that's a trader. Really, the common trader is someone like sitting in their little home office, kind of doing their thing by themselves, trying to make enough to cover a couple bills in the beginning to slowly grow. With the big change, what happened when we introduced screens, we went from, let's take a pit where maybe there were a couple hundred guys or 500 traders in a small little section. They were the ones that had access to this market. If you weren't standing in there, you were calling a broker. That broker was calling a phone clerk. That phone clerk was then tapping a broker on the shoulder saying, hey, someone wants to buy a one lot. Well, you weren't just buying a one lot on a phone call. You were waiting. They were going to fill a stack first and say, okay, now we have 500 we're willing to buy. So now we're going to try and get you a price as close as you've asked. But it wasn't, you can just buy and sell one lots. You were trading full size, the full S&P, right? Which is not one, or not a quarter ticks, but full handle moves on a one lot. So it was a whole different ball game every tick that we took. And so it's changed drastically. And so we got to get that mindset of this glamorous lifestyle out of our heads, and, work from where you can. And a lot of people are doing it from the phone now.
Well, that old thing with the phone, it really did used to be. It's hard to remember, like the make a market type thing, where it's like you would just call if you're looking for bonds or whatever. This is before my time. You call your broker and you just say like, how many you want to do, and quote me a market. You don't say if you're buying or selling, and they quote a market, and then you say buy or sell. I mean, that's so different from what's going on now, where you can kind of see that.
Funny story about that, Jack. I have the same name as my dad. We're both Dan Hodgman. When I was a kid, he used to, every night, because he didn't have a way to check what bonds were doing, so he had a clerk that sat in the pit all night long, and he'd call his clerk, and he'd go, Dan Hodgman, what are bonds? So as a little kid, every time I'd hear the phone ring, I'd put my hand up to my head and go, Dan Hodgman, what are bonds? Dan Hodgman, what are bonds? Like a 3-year-old walking around the house asking what bonds are being quoted at right now.
Yeah, it's the same thing. I mean, even in early 2010s, before you could really do it on your phone, right? It was easier to call your night guy and be like, what's happening right now? Times, they are changing. And other thing, oh, by the way, along with the glamorous part of it, it's a lot of and this gets to my next point, but I'll say this first is, well, let's just say this. There's a partial myth. Part of it's true. I said this on the outline we have here. There's, I think, this sort of half myth that traders are a-holes. And yeah, you can find those. But in my experience too, I think this goes along with the glamorous thing. Especially nowadays with things being so computerized and quant heavy and stuff, a lot of the most successful traders I know are kind of more reserved, or dare I say boring on occasion. I mean, there's some of them that are big and flamboyant. And there's definitely some people, in my experience, I've found more a-holes in the middle of the pack who they're the guys that will let you know exactly how much they make and exactly how much they trade, and kind of trying to be a big shot. No one wants to be that. Everyone loves self-depreciation, right?
And they're never the ones to tell you how much they lost either, but they always tell you how much they made. But I think you're spot on, Jack. I think people that fall in that category are the ones that are struggling, haven't done well, they're focused on this ego side of things, and they're not so much focused on their trading itself.
Well, they're holding on to something. It's one of those jobs too. If you're in the field, right? There's a certain cachet that comes from being a doctor. You say like, I'm a doctor, I'm a lawyer. There's a lot of degrees of that, but it's a nice thing to say at a cocktail party. Being a trader is one of those things that, well, that can really mean anything. But I think the people that really want you to know that, they tend to be like really holding on to that. I remember when I was in the trading business, usually I would just say that like I worked in finance or something. It was almost too like what I did. It didn't take like rocket scientist, being a rocket scientist or whatever. But to someone who wasn't familiar with the industry, it would take 20 minutes of the most boring conversation about treasury spreads to like say what I actually do. So I just said I worked in finance. It was just easy.
Well, and then if you said you're a trader growing up in the Chicagoland area, like, oh yeah, you're a trader too, just like everyone else. Like people kind of rolled their eyes at this idea of being a trader.
Right. And then they ask you if you know 14 different people from Brother Rice from like the 70s.
Right.
You know.
Right. My cousin was a runner down on the floor. Did he ever check trades? Sorry.
Sorry, I've seen it once.
I have no idea.
Yeah. I also think as far as that glamour thing we talked about, this ties into, I think there's a big myth that traders are supposed to be prognosticators, almost like fortune tellers. And what I think that comes from, I was just thinking about this before we came on. And I think it's why it's so damn hard to make trading content too. Like, Dan, you and me make content here. It's not like cooking or like something visual that you can show. And especially if you see like trading on TV, we're talking about like dramas and stuff like that. It's very difficult to show what goes on because it tends to be kind of complicated. Like in the show Billions, the version of the hedge fund that he's at is just like a bunch of guys like sticking around pitching stocks to buy and sell, which that's not really how it works. Or like future telling. You ever see the movie 25th Hour, Dan?
I have not.
Oh, that's a Philip Seymour Hoffman, Ed Norris, Spike Lee movie. Barry Pepper plays, it's a guy, he's reporting to go to jail the next day and he goes out with his friends. And one of his friends is a trader guy. And they display his version of trading by he's just like pounding Red Bulls and the unemployment numbers coming out and his boss is saying like, get flat. He's like, no, I know this, get flat type thing. And then of course the number comes out and he's right and they make a bunch of money. It's like, that's not how a prop shop works. If you took a huge position through unemployment like that and refused to get out, you would get the old heave ho. But there's more drama.
It was an aggressive heave ho. If you're carrying a number in a position like that.
Exactly.
But, Jack, I'm glad you bring this up because that's really, really spot on. I mean, it's hard to visualize what trading is. Movies, you just hear them say, sell it, sell it, sell it, sell it. And then everyone's sitting there and there's every trading movie. It's like, okay, buy now, buy everything you can, buy it all. Like they're bidding it down, then they're rallying it back up. That's not realistic. I mean,
the only version of that I have seen the, say CEO or risk manager screaming at people to get flat. I have never heard like buy, but I have heard like start getting out with a few choice expletives before. I don't know. You ever run one of those?
I think I may have told this story before on here. Maybe I haven't, but I'll never forget it. I was one of the hedgers at the time when I was standing on the floor. It was before I was even hedging. I was just down there clerking, doing some trade checking. I was young, and the hedger had to run. He's like, I got to run to the bathroom really quick. I'll be right back. So he scoots out. He's like, put the headset on in case someone needs something. And my dad was screaming, okay, buy 10. So I start working an order to buy 10 below the market. Well, I didn't know the lingo, and I've never been so scared in my life as I watched my dad come flying out of the pit. Like it was an elevated pit, and he grabbed the handle and he swung out underneath. My dad's not the most nimble guy. And he came flying out screaming at me to fill the order. And at that, it down ticked. I got my buy at the right price. Little did I know, every tick on a 10 lot in bonds is $325. Like there's a lot of money at risk there if it went against us. And it wasn't just filling a simple order, it was hedging an options position. So there's a hell of a lot more than just 300 some odd bucks on the line.
Yeah, you're trying to do the old power leg.
I didn't know the difference. I just thought, buy 5, you work the order. I didn't know the lingo yet. Buy 5 was just fill the damn order.
That was a dangerous game to play. I don't know how esoteric this will be out there, but on our spreaders, we used to have like, you could set an auto leg feature where if it got it, it might like sit around and try and do essentially what you're doing. But then of course you would just get washed out real quick.
Every time.
Yeah.
Except for that time. That was the only time, and I never got washed out. I got damn lucky. And I got a very good lecture when I got invited to my parents' house that night for dinner.
There you go. And sort of like the last myth I wanted to go to, because I think this goes more to trading psychology and everything. And I mentioned this in some like work thing we did the other day. We were talking about something else, but it's that old, I'm referencing that George Carlin thing again. So George Carlin has a joke along the way that's like, have you ever noticed that when you're driving, everybody who's driving faster than you is a maniac, and everyone who's driving slower than you is a moron? You see some of that attitude in trading in two ways. One, it's like every trade that works out, I'm a genius. I am the master of the universe, and every trade that goes against you, it's this is rigged. It's rigged. And I think when comparing to other people too, and I was guilty of this to a certain extent sometimes, but it would be like, okay, everybody who's doing worse than me is like, man, they're not half the trader I am, but everyone who's doing better, they're crooked. They're doing something. They're like, they're on the take. They're spoofing.
It's funny you bring that up too, because when I saw this on the list here, I could instantly think about it. Like I've heard people, especially back in the floor days, right? Like I was only there for a small little piece of it, like a couple of years. I grew up around it, but there was that common myth that like anyone that was good on the floor, like to the other traders, if you were a really good floor trader, like, oh, you grease the broker as a local, you're greasing them, you're doing something. There's no way you can do that well because you must be doing something with the broker on the side, or you're picking up some of his orders, or you're trading for him and you're getting those fills, and then you're doing something on the backside to get him. No, that's not the case. Sometimes it's just you're quick to the fill. And the important thing was you were quoting every single market, which is a huge difference back then versus now. Back then you had to, if you wanted to get fills, every trade that came into the pit, they'd say, hey, what's the market on this, right? And I was an options guy, so it'd be like, what's the market on the 5-6 call spread? And you'd come in and you'd say 7-9. Okay, if you're someone that's giving him 7-9 and you're giving him a decent spread and he likes the prices you're continuously giving, when the order comes in and you're filling it, no matter what side it is, because when all he's asking for is the market on the spread and you've got to actually give him the prices, you don't know if he's looking to sell the spread or if he's looking to buy the spread, and you got to fill that order every time. That's what's going to get you kind of in line. Hey, I'm here taking every order that comes into the pit. That's my job as a local. Our job was to be market makers, make this market and fill that market, and then find a way to make money with it. Nowadays, we can kind of, it's really nice. You don't have to do that. Yeah. Market's already made for you as it bounces up and down like this on your little dome. And,
yeah,
you can just pick and choose. Hey, I like that.
Yeah, you're in full control.
I don't like that. I can sit back and
full control of whatever you're doing.
You got full control. And at the end of the day, I'm sure there's some tinfoil hat people out there that think someone's watching and saying, they watched me put this on. I tell you what, they're going to find my stop and it's going to rally. Well, that's just how.
Well, that's kind of your fault too. I mean, like if that's just part of their strategy. The last thing I'll mention is the common one that I may have unfairly lobbed at a certain coworker of mine that was on this podcast once, is you'd be just that, oh, this person's trading way too much size for this. And you know what? They're going to get their comeuppance. It's going to blow up at some point. But it's like, well, they got to that point by doing it. And maybe you're just not made for doing it. I'm talking about myself here, not them. So
right? It's like, it's almost that jealousy factor comes in. Like, no, they can't be doing this. There's no way. It's going to blow up. Well, they've done this.
Well, yeah. Then they win, Trader of the Month for like 23 straight months. And you're like, well, that 24th one, you better watch out.
Right. I'm coming for you.
Yeah. So those were my myths for now. That's all I got. Is there anything you want to close up with here, Dan?
I think we kind of touched on it. I mean, the one that really stood out to me growing up as a child of a trader and in the trading world, and everyone I talk to, they think like professional traders are all millionaires. That's really not the case. People are doing this just sometimes just to get by. A lot of people are doing this with a second job. It's a means to a bigger opportunity down the road. But don't come into this thinking you're going to be the next Paul Tudor Jones or Gordon Gekko or Axelrod, or what is the guy's name from
Billions? Bobby Axelrod. All those folks. Yeah.
Don't come into it with that mentality. Come into it thinking, hey, let's try and focus on making enough in a month to cover a couple bills. And if you can do that, then you're going to create some opportunity. And maybe you'll never become a full-time trader, and maybe you always will have to do it in conjunction with something else, but it's going to create some opportunity and maybe create a little extra cash flow in your life to help cover some odds and ends.
And speaking of those, and since you're in the risk team, Dan, maybe you can throw it out there. But speaking of a little more cash flow, we just changed something with the rules here, didn't we?
Pretty excited about this one. Had a lot of conversations around it, and now, after, as everyone knows, if your first $5,000 is 100% yours, we used to be an 80-20 profit split after that. Well, we've increased that 90% to you, 10% to the firm. So make sure you take advantage of that. Continue working on those payouts. And speaking of payouts, we've got some really exciting ones coming out, and I'm sure Jack's going to have some more information on that down the road.
We will. And also, I'm just going to keep on teasing these things. I don't care. I don't think MP watches this anyway, but later in the summer into the fall, keep your eyes open. There might be some more little goodies that come along or get taken away like that in the trading combine. So we've been listening to you. We're working on the tech part of it, and there's some good things coming. I assure you. I'm trying to wink. I can't wink. And some of you are listening to this as a podcast, so I shouldn't be doing that, period. So anyway, Dan, thanks for joining and talking myths.
I like myths.
I love them too. Thank you, producer Holden. Otherwise, we'll be back next Thursday. Stay safe on the trade tomorrow. Hope it's a good one for you. But, if it's not working, take the afternoon off. It's the weekend. So have a good one. And as always, namaste and trade well.